Hey guys, what's happening? It's Ray here with Mastermind Traders Academy, and it has been definitely a long time since I've recorded anything, since I've posted anything, and yeah, I was pretty much on, yeah, I would say an hiatus for a while. So, away from Forex, away from everything. I did have a few other projects that I was working on, the wife and I, and pretty much we have streamlined those projects, and we're here again, or I'm here again, and ready to get the show on the road. Now, I know a lot of guys have been asking me, Ray, are we going to start doing signals again, um, and so forth? And the answer to that is no. I'm no longer providing signals, and for one of the main reason is that as the old adage goes, um, you give a man a fish, he eats for a day. You teach a man to fish, he'll eat for a lifetime. So that's pretty much the model that I have right now, where instead of giving you the fish, I'm going to teach you how to fish. And by me teaching you how to fish, you can develop your own strategy, your own unique style of trading that is going to help you in the future. So, again, the answer to that question is no, I will no longer be providing Forex signals for my group. Now, another thing that I'm going to be doing is I'm going to start being a little bit more active, especially on YouTube and in my Facebook group. Again, time is of the essence. I'm very limited with time because I have different projects. I trade on a daily basis. I also mentor on a daily basis. I also do real estate, my real estate investments, and so forth. So, I got my hands in a few different pots at the moment. Nevertheless, I am still 100% focused on Forex trading. It has been my passion, it has been my life, and it will continue to be my life all the way until I'm ready to leave this earth. Hopefully, it's no time soon, but nevertheless, that is my key. Now, what I'm gonna what I'm gonna do today is just give you a brief analysis of what's going on with the market. Um, Nothing too fancy, maybe around 3 minute worth of analysis. But again, as I said, guys, I'm gonna try and do this more consistently, more frequently on a weekly basis, or as often as I can hop online and give you guys some tips and pointers to enhance your trading um, abilities. So we're looking at the euro dollar. And another thing I want to state is that for the past 6 months, 8 months, 9 months, I have only been trading the euro dollar. And one of the main reasons for that is the euro dollar is pretty stable. Um, I know the direction in which it's going, which is south. Um, and therefore, it makes my life a whole lot easier. I'm not choosing 4, 5, 6 different currency pairs. And right now, I'm up quite a damn bit. So again, guys, it's not the amount of trades or the amount of currencies that you do, it's the quality of trades that makes a whole lot of difference. All right, now for those who've been following me for a while, you know that I am passionate about trading patterns because patterns repeats itself over and over and over again. And where I look for these patterns is at key levels of resistance and support. So one of the problems with a lot of traders is being able to find those key areas of resistance and support. Now, again, finding those levels of resistance and support, the higher the time frame, the more significant those levels are going to be. And one of the problems that traders have in trading is that they fail to wait for price to hit resistance or support levels. And therefore, they're trading based off emotion and not based off logical reasoning. So, let's take a look. Let's dive down into the euro dollar right now. All right, so I'm going to start with the daily chart. And as you can see, let me bring my drawing tool up. As you can see, the daily chart You don't need to be a rocket scientist to know that price is just going downwards. So you kind of see the pattern here. We have the market in a nice downtrend since 2018. So, and I'm not even going to go further back. So since 2018, we've seen the market trending downwards. So with the market trending downwards like this, what are the odds, or where do you find, or I should say, where is price most logically going to go in the long run? That's what I was looking for. Where is price logically going to go in the long run? Down. Problem is, we get caught up in these. We get caught up in these, and that's where the problem lies. Now, because we're caught up in these, and we don't want to get caught in these, what are we looking for? We're going to look for key areas of resistance and support. And key areas of resistance and support is basically where the market has hit multiple times and failed to go higher. We got there, we got there, we got there. So if we see the market hit this level, let's go back to here. If we see the market hit this level and the market starts to fall, then we start seeing the market coming back upwards. The most logical trading, the most logical reasoning in this scenario is to wait for price to hit this level, right? Because price already hit this level once, it hit this level twice, chances are it's going to hit this level again, and then boom. So if you were back in the day around here where we saw this level of resistance and support, and we caught the market, let's say here, and then the market starts to turn and starts trending back upwards, of course we're going to wait for price to get to this level. The problem is traders do not have patience. Okay, so let's go back again. All right, let's expand that a bit. All right, so along this this period here, we had some choppiness. Again, if your market is trending downwards, then your bias should be to sell. Simple. And not to say moving on smaller time frames, you're not able to trade against the trend. You can, but what you want to do primarily is you want to trade in the direction of the larger time frame, which is to the downside. So what we're looking to do is identify key areas of resistance and trade to the downside. So let's look at price as it is right now. Now price actually hit this level of support, and I'm not going to lie to you, I'm going to mention something to you right now. Price hit this level of support here. Now I traded the market from here down to here, exited the trade somewhere along this level. Then the market bounced back upwards, came back down to here, and guess what? Support. So the market hit that level once, hit that level twice, hit this level again the third time. So what I actually did is I took a small trade, guess where? To the upside. I got out of the trade around here, but I traded to the upside. The reason being, price reacted at these levels on 2 occasions. So there's a strong possibility when price hit this level again, it was going to go back to the upside. Now, because I'm trading in the primary direction, which is to the downside, where am I going to look for my resistance and support level? Am I going to go down to my 1-hour chart? Am I going to go to my 4-hour chart? Am I going to go to my 15-minute chart where it's pretty choppy? No, I'm going to look at my daily chart. And what I'm going to do is going to do this. So I'm going to hit on this horizontal tool, and then I'm going to put a level right there. So that's my resistance level right there. Now I could go here because we also use the phrase past resistance become future support, past support become future resistance. So here we had past support became future resistance, market broke over this level for a while and then came back up, and then the market hit that level once again. So we have had this level right here where the market hit 1, 2, 3, 4, 5 times. So if I'm looking to trade to the downside, of course, I'm going to wait for price to get to this level here, and then I'm going to trade back to the downside. So that's pretty much how we set up our trades, guys. There's a lot more to this, which again, as I said, as often as I possibly can, I will give you some tricks and tips as to how to trade the market. And that's pretty much it. So again, I just given you a nice trading tip right here that we're looking to execute a trade back to the downside. If and when price hit this level of resistance, then we're looking to trade back to the downside. Now, I do have strategies that actually trades without a stop loss. And guys, I know for those who have followed me, I have been adamant about using stop losses ever since, but I have been trying this new strategy over the past 6-8 months now. 6 to 8 months, and it has worked flawlessly without using a stop loss. This is more long-term trading, and it's not for intraday trades by any means necessary. If we're doing intermediate intraday trades, then I do recommend you guys use a stop loss at all costs. But in that strategy, there's no stop loss. Therefore, as I'm saying here, when price gets to this level, just to recap, we're looking to trade back to the downside. Now, when price gets to this level here, we're going to go down to the smaller time frame, and we're going to look for some market pattern that suggests price is going to turn back to the downside. Look at the market here. So we have the market right here where the market rallied up when, for those traders who saw this price move going upwards, I'm sure you guys were happy and expected it was going to continue going to the moon. But of course, nothing goes up forever. But look what happened when price got to this level of resistance. It started creating a pattern. Price broke, and let's actually make it a little bit bigger. So there we go. All right, let's do this. All right, so the market rallied up, pulled back a tad bit, rallied up, hit that level of resistance around here. Market came back down, retested this support level, and then boom, retraced and then fell. So if you understand what patterns are, this is your typical head and shoulder pattern, not your textbook head and shoulder pattern. Here we have the left shoulder, we got the head, and we got the right shoulder right there. And for anyone trading, you could have traded here, because again, we're basically equaling the left tip, which is around here. It kind of surpassed it a tad bit, but nevertheless, nothing in Forex is 100%. However, you could have traded it here. Again, if you were looking for additional confirmation, then you could have traded when the market actually broke the neckline, which is here. So this is the neckline. Price came down, broke the neckline right there, pulled back, and then the market just tanked all the way back to its support level around here. So that's it for today, guys. Hope you enjoyed this small trading session or trading lesson. And if you got any questions, feel free to reach out to me at on my Facebook group, mastermindtradersacademy.com, facebook.com/mastermindtradersacademy. Sorry. All right. So that's it for today, guys. I will see you again next week. Enjoy the rest of your weekend and take care.